Hello, and welcome to another edition of Real Day Trading. So it's been a while, and let me just say, I hate these 5K challenges. I hate the PDT rules. In my regular account, well, you've all seen the trades, posting them. Yeah, oh, $7 took on shop. Great, no problem. Oh, Tesla, another one. Win, great. Carvana just took $1. Bam. Wonderful. Easy. Just, McDonald's, another one. Sold puts on Apple yesterday for $3. Bought them back today for 14 cents. Great. That account, doing great. Other than the fact that I'm only trading it half the time, it's doing great. Why? Because I can day trade the damn thing. Now, here's another difference. Because, by the way, I'm learning with all of you here. I don't trade under PDT. So I'm figuring this out as I go. So here's a couple other things that is a major issue. One, I'm realizing you can't balance in a under PDT account. Why? Because to balance an account, meaning you have some bullish positions, you have some bearish positions, you have to be able to be flexible, right? And there was a time, for example, where the Amazon put debit spread that we had on was in profit, but couldn't take that profit. If you're balancing an account in a choppy market, then you need to be able to take profit when you're on the downside and then take profit again when you're on the upside. Worst case scenario, one balances out the other. But what happens in an account like this, when one balances out the other, you go nowhere. Here's another issue. There is a psychological issue, and it was on full display today, where I was frozen like a deer in headlights. I will tell you how. NVIDIA. At one point, the NVIDIA calls were worth about $1.50. NVIDIA got to, bring it right up here, go to NVIDIA, good old NVIDIA here, right around here, right? Actually, no, sorry, it was right around here today, 282, early on. And the calls were worth around $1.52. Now, normally, if this was a non-restricted account, I would take that profit or take the $2, right? Because I already bought back the short call, so it wasn't in profit yet, but close. And then I would go back in after it dropped. But here, well, if I took the profit, then I can't go back in. All right, it's heading up. Now I just got to hope that it's going to continue to 285 and hit the target. But it doesn't. It goes back down. Well, damn it. Now it's at 60 cents. Okay. So now I'm waiting. It has relative strength going back up. Frozen. Totally for Amazon. At one point, I bought back the short put, and the long put was worth $7.50 because Amazon dropped all the way down here. But here was the problem. Well, now I'm thinking when Amazon's down here, I have this down here, but I have NVIDIA all the way down. So now Amazon becomes my only hedge. My thinking here is, well, if the market starts heading back up, so will NVIDIA. Great. NVIDIA will be the profit maker. If it keeps going down, lose NVIDIA, but Amazon's a profit maker. What winds up happening? I took profit in neither of them. What did they wind up being worth at the end of the day? 1 cent. Yeah. It is shocking that I still have 2,232 in the account right now. Because there you go. That's where it is. Shocking. Right? I am figuring it out. I will figure it out. I will figure out how to trade this. And when I mean trade this, I mean trade it. because that's what I'm trying to figure out here. How to trade, and that's the challenge really, how to trade a $5,000 account. Because yes, I did mention in the past, you can do put credit spreads, right? And you just put them on and keep them on month long, and then you take the profit at the end of the month. Now you're at 5,500, and then the next month you do the same thing, and maybe now you're at 6,100 after 2 months, and you do that, and it's really slow. I am trying to figure out how to trade an account like this. That's what I want to do. And that is the challenge. Because I want to be able to also figure out not only how to trade it, but how to do it consistently. How to consistently trade it. Because if it's not consistent, it's of no use to you. If all of a sudden I grab 30 rig calls and rig goes to 10 and I'm like, I'm at 9,000, yay. That doesn't really help you because that's a freak occurrence. If I would have stayed in Tilray, I probably would be close to 5 right now, actually. I got out of Tilray because I had 660% profit on Tilray. So it made sense to get out, and Tilray had already dipped back down. Of course, the damn stock winds up around $8.30. I would have been able to take another $1,400 on that trade. But in this type of account, can't do that, right? So that is my goal. That is, it's a challenge for me as much as for anyone else, is to figure out how to actively trade a 5,000 account. And I will figure it out. I will not stop until I figure it out. I don't care how many times I have to do it until I figure it out. But I will get it to where it's consistent. To where every single time there's a $5,000 account, you can double it. That, to me, is the challenge. That is what I'm trying to do. Because otherwise, it does no good for any of you. None. Other than to hope for freak occurrences or out of the money calls that happen to pop. That's not going to be consistent. That'll happen 1 out of every 5 times maybe. The other 4, you're screwed, right? So there's that. Other news, by the way, it looks like we're going to get our own show. And I'm talking full-on show, fully produced show with, think Jim Cramer, just much better looking and much more intelligent and far more modest. A desk and monitors and actual camera people and a director and a producer, and 3 times a week, a full-on show. I'm going to call it Real Trading, not just real day trading, Real Trading. And we will launch it on this YouTube channel, but at a certain point, the goal would be to get it picked up in a larger distribution. But a benefactor who is also working for a as of yet unannounced release that I know I've been teasing for a while is helping put this together. So that is going to be coming soon. I'm helping design the set now as we speak. And then you'll all get to see me. You'll get to see me out there as I rant and talk about stocks and psychology and a million other things. It'll be fun. You'll love it. Let's just take a quick look, by the way, at the market, because that is what we should be doing. And if we notice, the market since January 19th right here has gone absolutely nowhere. Doesn't feel that way, does it? All the way down here and then up here, but it's gone nowhere. This is a pretty strong bullish trend, isn't it? Right? And at the moment, Honey Badger don't give a shit. I mean, news? What news? It used to be um, oh, peace talks are breaking down and SPY would drop 100 points. Now, SPY doesn't care. And here is the interesting thing. There's something called a SKEW index, SKEW. What is this index? Well, investors, when I say investors, institutions, and I'm going to do a larger thing on who the hell this is, because I'm sure you all have in your mind the picture of a really old white guy in a suit. Not far from the truth. Pretty close. They don't really wear suits much anymore, but you're right there. And what they have is they have factored in, let's say you're managing a $2 billion fund, right? And your job is to take that money and put it to work, meaning that money needs to make money. Now you factor in the chance of a black swan event. For those of you who don't know, a black swan event is sort of one of those one in a decade events that just crash the market. And we had one. We had one in early 2020 with when COVID started, right? Market crashed. We had one in the .com, the housing crash, 2008, 2009. These are black swan events, and investors account for that. That is modeled into their expected returns. There is an X% chance a black swan event will happen in any given year. And so that index, when it's at 100, is average. This is an average percent, and I think it's around 1 to 3% chance, don't know the exact number, when it's at 100, that'll happen in any given year. It's kind of like living in California. You know there's probably a 1% any given year that a big earthquake will hit. And you factor in for that. You buy earthquake insurance and, you live life to the fullest like every day is the last. Not really, but you factor it in, right? However, since the crisis in the Ukraine, since the brutal invasion of Ukrainian people, that index soared up to around 140, meaning there was around a 15% chance of a black swan event. Why? Because any number of things, if Putin decides to bomb a something really close to a NATO border and it goes over into the border, if there is an expansion of the war, if any number of things that could go even more wrong than they have in there in that whole war could cause a black swan event, right? Is it highly likely? No, there's so many factors working to prevent it. But it's possible. When they did announce that they're commencing more peace talks and trying to get to a resolution, that index dropped 10 points in one 5-minute bar. And when it did, SPY in kind started going up. And this right here, this represents investors can only stay on the sidelines for so long, right? And you're starting to see a shift, by the way, a shift into growth stocks. You're starting to see, but you're not seeing a shift out of energy stocks. So there is a combined sectors going on here in industries. One bad headline, though, and at the moment I said the headlines that used to be bad no longer seem to phase the market. So now the bar has been risen. It's got to be really bad, right? But if that happens, you will see a drop that is probably going to take us back down through the 200-day moving average. And once again, makes it difficult to swing trade. But like I said, we will figure it out. There is a strong bearish trend. That is what we are going to play. That is what we have right now. Currently, We have bullish positions on Apple, on RIG, on CLF. We do have a bearish position on BABA, and all Chinese stocks are in a bearish state right now, and that looks like it will continue. So this isn't so much a hedge because I've decided we are not going to hedge anymore. We're just going to go directional on the account, and that's where we are. So until Monday, unless I do another one over the weekend, which gives you, and by the way, during that little absence, you probably all had plenty of time to watch more videos and read the damn wiki. And I will try to do more videos next week. Was dealing with a lot of unexpected issues that working on resolving. So distracted trading is also not good trading, but no excuses here. I am figuring it out. So until then, I hope you all have a great weekend and enjoy reading the damn wiki. Good night.